Coming up in this show, I'm going to give you my opening comments on the markets. Arby has a sample for you of Future Speak, our member video on Wednesdays, and he's going to look at silver in a strong pattern. I'll give you a hot minute on the 10-year yields and tell you why I think rates have peaked this year. And we'll take a look at our new market condition monitor. The MCM is now available, and I'm going to show you our amazing new app at an amazing introductory price. And then I'm going to bring you the analysis on the stock market. We'll look at the intermediate view of the S&P 500 and more. And I'm going to put that market condition monitor to work. I think you're going to love it.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market had a rather chaotic week last week as investors were glued to the action in a now very volatile banking sector, plus to the Fed policy actions and comments from Fed Chair Powell and Treasury Secretary Yellen. Early in the week, stocks posted good gains as banks stabilized on the forced marriage of Credit Suisse and UBS, and five of the biggest central banks in the world posting $100 billion in liquidity. So Monday and Tuesday, we saw the S&P 500 strong. 90-point gain between the two of those days as the techs and the banks led the upside moves temporarily. Also helping was Janet Yellen, as she was indicating that they were going to backstop all depositors from all of these banks, all of the banks, it seemed like. Wednesday was Fed Day, and it was truly wild. The markets were stable into the FOMC policy statement, and they did raise 25 basis points, and people were wondering if they were going to actually do that based on the banking conditions. It was a slightly less hawkish statement, and that sent stocks to the upside very quickly. They were down about 16 points and rallied to plus 38 points on the S&P 500 for about 15 seconds, and then fell again, and they were trading unchanged for a bit during the Q&A before plunging to the end of the day, where they fell 70 points on the day. And two things is what hit stocks. First of all, Powell said bank conditions were sound. What exactly is he looking at? And he said rate cuts, they're not on the table. We've been talking about that it was likely not to happen until sometime in 24, and he really indicated that. No pivot. Right now, though, at some point, they're likely to pause. Overall, he ignored the banking turmoil, though he did say that credit conditions might be tightening a little. Banks, well, they fell hard and then got a lot worse when Yellen, who completely spoiled the party, and she was giving testimony before Congress, and she backtracked on those Tuesday statements, saying that they're not providing blanket deposit insurance. Well, then the banks collapsed and sellers came in right into the closing bell on Wednesday. It was a rough day for the market. Thursday, kind of a similar day. Yellen waffled again. I think she needs to get a job at Waffle House. What do you think? Well, you know what I think about her. She said that they were prepared for additional deposit actions if needed. Well, the S&P 500 moved up 60 points. It was a strong morning, but then fell 80 straight points as another one of these days that gave up big gains. Slightly up for the day at the end of the bell, but bulls were actually rocked as they go chasing these high cap growth stocks and then face another failure. So it was a bad day or a bad decline on Thursday after everybody was buying those stocks and they gave it up. Friday, banks again under pressure as Eurozone stocks fell hard. Deutsche Bank, their credit CDSs, they rocketed to the upside. That made everybody nervous, and Credit Suisse and Deutsche Bank fell hard. The S&P 500 has been down most of the day here as I do this report in midday, down right now about 35 points. But the week overall was kind of a sideways week that hardly reflects the overall action. The stock market, it did achieve the low we were expecting in March. And while we see improvements based on our work, it's far from an environment to turn crazy bullish. When you get massive interventions like we've seen here in the government, as we're seeing now, and potentially we'll see more of, and the Fed's balance sheet now jumping $400 billion as they were supposedly in QT, well, that might be all a factor of reverse repos, and we might see that go away. But that's reflective of big trouble. This is not a reason to get overly bullish. This is not a market when you're in that kind of environment to get overly bullish. Well, unless you have a steel gut. Buyers, they felt that this week as they chased the stocks to the upside, especially techs, and then saw big failures. While the NASDAQ is very strong relative to the rest of the market, well, the rest of the market is not. And I'll show you that as we get a little further on in the show. So rather than up, and away, more we expect range trading. And I'll show you those levels in the range as we get further on in the show. This actually, and I talked about this, may be one of the best trading markets you will ever see. But you got to give them room because the giant swings that we're seeing right now are likely to continue. Here at midday, stocks are mixed. We'll call it small gains or losses on the week. The NASDAQ is the best, up maybe a little over 1%, but the Russell is the worst, and that's all about the small banks weighing down on the Russell index. Bond market also close to unchanged, 10-year yields down about 2 basis points. The gold market right around unchanged, but silver is taking over and moved up about 70 cents on the week. Silver is strengthening, and we have talked about gold going to all-time highs this year. It's very clear that we're in a very strong period for the gold and silver market, and we believe that there will be pullbacks that are going to be super buying opportunities. The dollar down about 0.7% on the week. We think it's going to make a tiny little near-term bottom right in here, get a little bit of a bounce, and then set up for a sell. And that would be, if you want to sell the dollar, it would be a time to buy euro. We think that's setting up in the next couple of weeks. Oil, very weak, though it did rebound, $2 on the week. Overall, these patterns look bad, and it looks like 64 is coming, and that is all about the recession that is likely to be hitting the world a little bit later in the year. So that is the opening that we have for you right now, and there's lots coming up in the show. Right now, I want to remind you to go to askSlim.com and explore. Make sure that you share what we have here and subscribe if you're brand new. Get acquainted with us by signing up for a level 1 deal right now. That's 3 months for $45. You get a ton of daily information from us. On YouTube, subscribe to the channel, click the notification bell, and like this video. Give it a thumbs up. On Twitter, follow us at askSlim. And questions that you may have on the tremendous amount of things that we show and bring to our members every single week, please do write to Matt at askSlim.com. This is a preview of FutureSpeak, and RV does this every single week. We do the analysis on 24 different futures contracts, and then what he presents to you is 48 charts. It's over an hour presentation, and this is a sample of that from this last Wednesday on silver. It's a little bit behind right now because silver took off again, but we're talking about the bullish conditions in there, and you need to be a level 2, 3, or 4 member to see the complete FutureSpeak show. RV, show them this fantastic work.
If we go ahead and shift over to the silver market, that is /SI, also clearly formed a low right on time on the weekly. You can see that there was a low due 130 to 327. We held that 61.8, didn't have any closes through that. We are still looking for a lower high to form versus this old high, and we're looking for a move now up to that 78.6 around 2375. You can see that this is just holding in very well and really poised for a move back to the upside. If we shift over to the daily, you can see that this is just that really sharp move up after just left-hand translation after left-hand translation here. We are now forming a nice bullish cycle here. There's a low that's due in the early part of April as well. Now we have a positive ribbon, so we'll have to watch both of these tracks. Does it form its high around that 61.8 at $23, or does it move through up to that 78.6 around 2387? We'll have to see. Either of these cases are bullish. Obviously, that green track would be more bullish, as that would form a strong swamp cycle, and then we look for it to move back up after that again. Okay, so overall patterns are positive. Just watching for mild dips down into this 2174 to 2140 area, and we would like it to hold above that 61.8, which is rising, but it is currently at 2105. Okay, so that is a picture here in silver, acting well and just watching for dips to likely set up higher highs.
This is a hot minute. We're going to look again at the 10-year yields. I've said it before. I think that the 10-year yields have peaked for this year, and I'm going to show you why. Take a look here as we look at the side-by-side on TNX, the 10-year yields, and you can see in here the beautiful cyclicality that we look at. On the bottom are the cycle brackets, and there's your rhythms in there. There's a minor cycle that you can see 1, 2, 3 that makes up each of these dominant cycles. That was due to bottom right in here, and it did. It rallied and failed below this peak over here, and then began to move down. Moving under 3.334 yield is a clear breakdown, but getting close to there is a strong message. We think that yields are going to continue to be moving down in here, and any bounce in here is going to give you a resistance zone, which is the area to buy futures. So we're looking for yields to move down at least through August based on this chart. Here you could see on the 10-year chart on the daily that this is just a beautiful cyclical pattern in here, and you can see the nice rhythms right in here. This is talking about yields declining out here into mid-April, and then you get some kind of a rally, but we think yields are going to continue to move down with our ultimate target for this year way down over here at about 2.92 yields. So we think yields are going to go under 3% on the 10 years. And of course, with all of the talk about the Fed and banks and all of that, I think the bond market is telling the story. All right, stock market analysis and projections on the S&P 500, but please do look at this important information on our analytic approach, and you will get a good sense for the work that we do. So take a moment and please do read this slide. All right, stock market analysis coming up, but first, the Market Condition Monitor, the MCM premium version, is now available. Introductory pricing for askSlim.com. Level 1 to 4 members. Yes, you need to be a level 1 to 4 member to be able to take advantage of this amazing app that we're coming out with. State-of-the-art trade planning tool assists you in catching impulse moves in the indexes, ETFs, and stocks. And most importantly, to help you avoid being on the wrong side of these momentum trends. There are special settings, which I'm going to show you in just a minute, for all the trading styles, including our new MCM version of mobile. So it's optimized for mobile. You'll be able to look at it right on your mobile device. Current members, go to the membership options section or click Learn More on the homepage on the top, and you will be able to see the information and sign up for this incredible deal. Not a member, please do join. Become a level 1 member and get started, or become any level member. Get all the benefits of askSlim and this special 50% off price on the Market Condition Monitor. Special $17.50 a month, and I'm going to show you this in just a moment. You're just going to absolutely love what I'm showing you. So this price of $17.50 a month, it's not like we're giving you, a couple weeks or a month to look at it. We're going to lock this price for you. You become a member, you get this add-on of the MCM $17.50 a month locked for 6 months. Click the Learn More button right on the top of the homepage. Or go into our membership area and you'll be able to get the information on the new Market Condition Monitor premium version. All right, stock market. We're going to look at the S&P 500, the NASDAQ, and the Russell. Mostly our focus is on the S&P 500. I'm going to give you some idea of what's going on in this chaotic and widely mixed market that we're looking at right now. It is chaotic as we see these kind of wide swings that we see every single day. And then we're gonna use the MCM, and I'm going to show you the conditions in the market right now in multiple time frames, because this app is just great for people in really all different styles of trading. So let's first take a look at the S&P 500. Remember, we are cycle analysts. What we look at is the rhythms in the market, the energetic movements in the market. Let's take a little tighter look right in here. And if you look on the bottom, you see the arcs. If you're brand new, those are cycle brackets. They're a drawing tool, and it helps us understand the rhythms in the market. You can see the smallest one right in here that is really showing you these movements as they occur in the market. And the fact that this one bottomed right over here at a time that we were looking for really has us believing that the important low really is in place in here. Though, if you look at the bigger cycle bracket right in here, that's the stocks 50 and the Russell. That really gives us a sense that we're going to be in a range in here. And you could see us pointing to the range. Right over here is a bottom warning number at an important 61.8% at 404.35. It needs to get through that. You could see it tried right over there and then began to fail this week in order to give us a warning that this bottom is really in place. And a confirmed level, it would be at about 410.50, where it really is telling us the bottom is in. So right now, we don't have a confirmation. On top of that, we have negative momentum that you can see right there. And this period of risk that you saw right over here, this yellow area right over here, it like this one and like this one, it did not give a huge decline. We thought it would be 30 to 60 points on the downside. It was more like 40, so it got into the zone right there. And it is looking, based on our intermediate and shorter term patterns, like this important bottom is formed. I'll show you the NASDAQ in a moment, and it's very clear relative to this pattern. I just want to take even a tighter look at this right now so that you can see, and when I show you the NASDAQ, you will get a good sense for how much better the NASDAQ has been. So right now, when I look at this on the SPY, this is really the range that we're looking at, that we expect. Right around this area here of around 404 on the upside of the range, and the bottom of the range is right over here, which is right around the warning level at 385.50. So we think it's going to get stuck in this range over here for a number of weeks until this period in here, when you get out into May, when there will be risk that this low could get taken out. I would like to see strength come in here and then just a pullback into this period and then take off on the upside. But right now we're in the bottoming phase, as you see right over here, with momentum not yet turned up. That is our reversal scout, and it's showing you the negative momentum in here. So it has a lot of work to do in this environment right now with the bank problems on one hand and the potential Fed pause on the other hand, all kind of fighting against each other. So that's why you're getting this range trading that's right in here. While they were all the way up here over 402 and then gave that back in this volatile market that we're in right now. Let's look for it to hold above that 385.50. Were it to break below that synced cycle low, that's synced with all of the other indexes and the daily charts, that's at 380.65. It will open a door for a lot more trouble. So we want to keep our eye on the important numbers. Again, we're expecting this range in here to hold the low about 385.50, the high about 404.35. Breaking out above this would be a very good sign that we're heading up to our 430 target for the year. Breaking below this level of 385 and then certainly 380.65 will be a warning that this bottom did not set. So this is a very important time frame in here. Let's take a look at the NASDAQ when we look right in here. And when I look at the NASDAQ, you're going to see a very different story. The NASDAQ actually took out this key peak over here. And what that says to us when it gets above that level is that it is broken out above the cycle peak resistance that you see right over here. This is a factor of the money moving into growth stocks, and that has lifted the NASDAQ. This is in a much better shape than the S&P 500, and you can see in here that where this cycle comes down over here into May for the stocks 50 and the Russell, it's very likely that it's going to hold up in this area and then take off again, moving up to the targets that we have around 13,200, and even potentially getting up to that next higher target there at around 13,600. So those are our targets for the coming later on in the year, and this looks in much better shape. In contrast to that is the Russell, which is heavily weighed down by these troubled banks, and you can see that it just is not able to pick up at all. The momentum in here is still negative. The momentum in the NASDAQ, by the way, is positive right now. So you could see this hugely divergent market. Now, talk about a hugely divergent market. What I want to really do is head over to our market condition monitor. This is the new app that you'll be able to subscribe to for only $17.50 a month. It's just amazing. And we're looking at the trader version right now. There are two things you can look at, trader and time frames. And we're looking at the intermediate time frame, which takes into consideration our algorithms based on the monthly, weekly, and daily patterns. And you can see in here, if you were an intermediate trader, in other words, maybe an investor or a longer term holder, the S&P 500 is neutral. The QQQ is slightly bullish. The IWM is bearish, and the diamonds, the Dow Jones, are slightly bearish. So you get an idea of a very mixed market in here, from slightly bullish to bearish, looking at these different indexes. This is a very unusual condition based on the huge disparity caused by the bank problems. This is not the conditions that would support a big upside move. At the same time, we're not believing that we're going to support a big downside continuation in here either, because of the overall cyclical patterns I just explained to you. Now, if you were a short, let's say a short-term trader, maybe a swing trader, you could see that what you have in here are conditions that are very bearish for the Dow and the IWM, slightly bearish for the S&P 500, and bullish for the QQQ. And you can see you can go all the way down here to, this is the near term, if you were like a very short-term swing trader, where they are all on the bearish side right now, as you can see. And if you were an intraday trader, if you were scalping, then you would look right over here, and this coincides with the work that you get brought every single week if you're a level 234 member, looking at the SIR live stream, our chart streams, and you'd use this condition with that. So it's fantastic. Let's just go back to this intermediate right over here and go into the scan mode, and let's just look for, which symbols, we have a lot of symbols in here, would be bullish, and you can see that you have the bullish symbols that come up in there, and you can scroll down in here and see all of those. I'm not going to show all of those to you. And if you wanted to look at particular stocks, let's just look at Apple, which has been very strong lately. You can see Apple in here for the intermediate term is bullish looking at that. If you wanted XLC, which is the Spider communication, you can see it's slightly bullish in there. You want to look at XLF, which is, well, that's the financials, and you can see that it's bearish. So you can use this in a great way. If you were look in the time frames mode right over here, and I'm going to put this stop the scan, you can see in here, it gives you the for the different time frames. Again, we're going to look at the weekly right over here that I just showed you, and you can see the spiders and the QQQ are on the weekly are overall kind of mixed on there, so you're not getting a really good read on that. And if I go to the let's just look at the 15-minute, which is going on right now as the market's declining, and that gives you a good sense right there on the 15-minute what the conditions are. So it's just a fantastic app. And the change log right over here on the right tells you when these things are changing. And coming up on upgrades, there will be notifications and everything. This is just absolutely amazing. Let's just go back to that trader mode right over here. You could see SPY. If I click on SPY, it's going to bring up all the information for you right there on each of those. So you can see right now the conditions are in the intermediate. Let's just look at the short term right there. Slightly bearish condition on the SPY, very bearish on the IWM, the diamonds, and bullish on the QQQ, a very, very divergent market. This is just an incredible app that we're sharing with you here and showed you how to really understand the conditions of the market based on what kind of a trader you are. Please do go to our website and check that out. You can click the Learn More button on the top of the page and it'll take you to a really good explanation and you can sign up. Remember, you need to be a level 1 to 4 member, so if you're not, just become a level 1 member and check it out. It's only $45 for 3 months, and then sign up for this amazing app that you can use right on your digital devices, or you can use it through our website also. Absolutely fantastic. That is a look at what we're looking at right now. We're basically a market that we think is going to be stuck in a range. Go to askSlim.com and subscribe. If you're new, get acquainted. Become a level 1 member. On YouTube, subscribe to our channel. Click the notification bell and like this video. And watch member videos in the playlist and past shows. Twitter, follow us at askSlim. And any questions you have on everything I've showed you, please go to your email and write to Matt at askSlim.com. That's everything I'm going to show you today. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to sit